Credit cards. You use them every day, thinking you're just swiping for a quick purchase or earning some rewards. But what if I told you that behind the shiny promises of cashback and travel points, there's a dark side? What if I told you that every time you swipe, the bank might be laughing all the way to the bank at your expense? The truth is, credit cards are designed to trap you in a cycle of debt, and banks don't want you to know how deep that trap really goes. Stick around, because in the next few minutes, we're going to expose exactly what the banks are hiding and how you can avoid getting caught. Trust me. You'll never look at your credit card the same way again. Let's be honest, most of us think of credit cards as a simple tool to manage our expenses. You swipe, you pay later, and you even rack up rewards along the way. It all seems like a win-win, right? But here's the thing. Credit cards are not as innocent as they seem. In fact, there's a whole side to credit cards that the banks don't want you to see. The truth about interest rates. First off, let's talk about the thing most credit card holders fear but rarely understand: interest rates. When you're carrying a balance on your credit card, you're charged interest. But did you know that the interest rate you're paying isn't as straightforward as it seems? The average interest rate on a credit card in the US is around 20%. But the thing is, that's just the average. Some credit cards charge as high as 30% or even more. This interest compounds, which means you're paying interest on top of interest. The longer you carry a balance, the more you end up paying. And let's be clear, credit card companies know this. They design their systems to make sure most people do carry a balance. Here's where it gets sneaky. Most credit card holders don't realize the full impact of interest. If you only make the minimum payment every month, which a lot of people do, the balance you owe doesn't get paid off nearly as quickly as you think. And even if you pay off some of it, that interest keeps adding up. It's like trying to fill a bucket with a hole in the bottom. Hidden fees you didn't sign up for. Next, let's talk about fees. You probably know about annual fees. They're the ones that show up in big, bold letters on your statement. But what about all the little fees that get snuck in there? Late payment fees. If you miss a payment by just a few days, you could end up with a hefty late fee, typically between $25 to $40. What's worse, that late fee can trigger a rise in your interest rate, making your balance even harder to pay off. Foreign transaction fees. Traveling abroad, many credit cards charge a fee of around 3% on every purchase made in a foreign currency. This adds up quickly when you're spending on a trip. Cash advance fees. Taking out cash from your credit card comes with a fee, 3 to 5%, and a higher APR, often 25 to 30%, more than regular purchases. Interest on cash advances starts accruing immediately, with no grace period. The kicker? Many of these fees are designed in such a way that they'll hit you when you're least expecting it. Banks know that most people don't read the fine print, and they use that to their advantage. Credit limits. The illusion of financial freedom. We all love a big credit limit, right? It feels like financial freedom at our fingertips. But here's a secret. Credit card companies don't give you a high limit to be nice. They give it to you because it encourages you to spend more. Banks know that the higher your limit, the more you're likely to spend. And once you hit that limit, they charge you fees. If you go over your limit, you'll only be charged an over-limit fee if you've opted in to allow transactions beyond your credit limit. Otherwise, your card will simply decline. And if your total credit utilization stays high, it can hurt your credit score. It's a vicious cycle that makes them more money. Here's the real kicker. If you're using a large portion of your credit limit, even if you're paying on time, your credit score takes a hit. Banks love this because it means you're in a position where you're more likely to carry a balance and get stuck in that web of interest and fees. The rewards trap. Rewards. The sweet, tempting siren song of credit cards. Free flights, cashback, hotel stays. Who doesn't love the idea of getting something back for spending money? But here's the catch. The rewards are often not as valuable as they seem. Credit card companies offer rewards programs as a way to keep you spending. Sounds great, right? But here's the twist. You have to spend a lot to earn the really valuable rewards. You might earn a point for every dollar spent, but to redeem that point for anything substantial, you need to rack up a large amount of spending. Meanwhile, you're paying interest on the balance you carry. You're essentially spending money to earn rewards that cost you in the long run. And don't forget about the fine print. Some rewards programs come with expiration dates, or they're limited to certain purchases. Plus, rewards like cashback, points, or miles are typically not taxed in the US. They're considered rebates, not income. Exception: rewards tied to opening bank accounts may be taxable. How banks keep you in debt. The minimum payment trap. The minimum payment. It sounds like a small amount, something easy to pay off, right? But here's the trick. Credit card companies design the minimum payment to keep you in debt. Most cards calculate the minimum payment as a small percentage of your balance, which means you're barely chipping away at the principal. Instead, you're mostly paying off interest. Take this example. Let's say you have a $2,000 balance on your credit card with an interest rate of 20%. The minimum payment might only be $40 to $50, which sounds manageable. But if you make just the minimum payment, it could take you years to pay off the balance. and you'd end up paying thousands in interest over time. It's no accident that credit card companies want you to pay the minimum. It keeps you hooked, paying off a fraction of the debt while they collect interest. Credit card debt and your mental health. We can't ignore the psychological impact of credit card debt. It's not just the numbers on a statement. Debt can affect your mental and emotional well-being. The stress of owing money, feeling like you're always one step behind, is real. And what's worse? Credit card companies know this, and they play on that fear. The constant reminder of your balance can create a sense of urgency and anxiety. You might even feel like you're trapped, unable to escape the debt cycle. Banks rely on this stress, knowing that it pushes you into making decisions that are not in your best financial interest, like using your credit card for things you don't need just to keep up. The credit score game. Your credit score. It's a number that determines so much of your financial life. What many people don't realize is that credit card companies are heavily invested in keeping you in the credit score game. They track your behavior, from your spending habits to your payment history, and use that information to decide your interest rates, credit limits, and even whether you're approved for new cards. But here's the problem. If you're always carrying a balance or using too much of your available credit, your credit score suffers. Banks know this, and they use it to their advantage. When your credit score drops, you're more likely to get offers for higher interest cards, trapping you in the cycle of debt even further. The bottom line, breaking free from the cycle. So what can you do to break free from the grip of credit cards? First, you need to understand the system. Credit cards are not your friends. They are businesses that profit off of your spending, and more importantly, your debt. The best thing you can do is use them wisely. Here are a few tips to keep in mind. Pay more than the minimum payment. Try to pay off as much as you can each month to avoid getting stuck in the interest trap. Watch out for fees. Be aware of late fees, foreign transaction fees, and other hidden charges. Stay within your credit limit. Avoid maxing out your credit card, and keep your balance low. Use rewards wisely. Make sure that the rewards you earn are worth the interest and fees you're paying. Remember, credit cards can be useful tools when used properly, but the banks have set up a system designed to keep you spending and paying interest. If you can manage your credit wisely, you'll be one step ahead of the game. The banks don't want you to know any of this, but now you do. Keep your eyes open and use your credit cards carefully. Now that you know the dark side of credit cards, it's time to take control of your finances. The next time you swipe, remember that every decision counts. Don't let the banks trap you in their web of hidden fees and endless debt. If you found this video helpful, make sure to hit that like button and subscribe for more insights on how to protect your money. And if you have any questions or want to share your own experiences, drop a comment below. I'd love to hear from you. Stay smart, stay informed, and take charge of your financial future.